A very warm good afternoon to all of my friends and investors and my colleagues. I'm Ashok Gupta here on the conference call for Shalimar Paints. I must admit that the first quarter of 21-22 was not a very good quarter for us at Shalimar Paints. Our results have not been very encouraging, particularly in comparison to our competitors who have shown much better results. We have faced many challenges, but two are significant. One was our revenues have not been in line with our normal revenues. On an average, our revenues used to vary between 90 to 95 crores per quarter, but this quarter they were hardly 55 crores, a drop of more than 25%. One of the main reasons for this drop was that our market is primarily in North and East. In North, our revenues got significantly impacted because of the COVID. As we all know, COVID situation in April, May and June was pretty bad in North, particularly Delhi and surrounding areas. In East, there were elections, and because of the elections in two states, again we got seriously hampered. Because of which our revenues are down by around more than 25%, where other competitors who have markets in other areas, perhaps their revenues are not having so much of a decline. On the other hand, we have been significantly impacted by commodity cycle. The commodities have been rising right from September, October onwards, and on average, the commodities have impacted our cost by around more than 20%, 20-25%. And we have been able to pass on the price increase to customers only to the extent of 4-5%, and balance is still unabsorbed. As a result of this commodity cycle and increase in the raw material cost, our raw material cost as a percentage of revenue has gone up from around 66-67% to around 76-77%. And because of these two factors, revenue going down and the raw material cost going up, we have been seriously impacted, and our EBITDA loss has increased, both with respect to last year when the raw material prices were lower, even though revenue was lower, and also because of the as compared to the average EBITDA. So this is what has happened in this quarter, pretty bad quarter for us. However, having said that, we are now taking action to bring back or resolve the issues which were in front of us. Fortunately for us, the lockdowns have been lifted almost from the entire country except a small portion left in Kerala. And as a result of which our sales have come back to normal, and this quarter we are already on at a run rate of more than 90 crores. So we are already reaching the revenue which we normally reach in a typical quarter. So if I compare with last year, the current quarter is better than last year same period. So for the raw material front is concerned, we have been able to further increase the prices of our finished goods in line with our competitors or in line with the industry leaders. And we are now hoping that our raw material cost will be in the range of 71 to 72% of the revenue. So with this two measures having been taken, we expect that we will be in a much better position from current quarter onwards. We are planning further price increase from 1st September onwards. So that should make sure that to a good extent, the cost increase by way of raw material should be passed on to the consumers. On the commodity cycle front, the prices of raw material have almost stabilized globally. For last 2.5 months, there has been no increase. In fact, there has been some adjustment in some quarters, even though marginal. So prices are slightly down from their peaks in most of the commodities. So to that extent, I think we have got some relief. So with the demand picking up significantly and raw material prices no more going up further and finished prices being increased by the industry leaders, we expect that from Q2 onwards, things will become normal and we'll be back to our days when we were making cash profit and perhaps now net profit. We have taken several steps to make sure that the situation comes back to normal. and we are hopeful that from this time onwards, all the issues which were there have been now resolved. So this quarter onwards, things will be normal. With these opening remarks, I would like to hand over to my CFO, Mr. Mohit, to give an idea of the actual financials, and then we can discuss all of the issues in detail, and we'll open it for question and answer. Thank you. Mr. Mohit, please.
Thank you, Ashokji. Good afternoon, everyone, and let me thank you, all of you, to join this call. Myself, Mohit Donta, from Shalimar Paints. I am presenting you the financials results declared on 30 for Q1. We have recorded a turnover of rupees 65.2 crore. If I talk about the comparison from the last year same quarter, it is almost 46% growth. Having said that, yes, last year same quarter was pretty bad because of the COVID. And this year as well, we had observed, or we have experienced almost 45 to 50 days impact in our quarter sales, resulting almost 35 crore down from our targets. Having said that, the same impact as Mr. Gupta has mentioned, that the raw material prices are high. If I talk about Q4, that it's the impact of almost 2 to 3% in raw material prices. But yes, last year same quarter, the impact is huge, because from Q3 onwards, from October onwards, the raw material prices went up, and these are increasing, till it was increasing till mid of April or May. So the raw material prices, which contribute, a major cost or significant cost to our P&L, is almost 76% of my net receivable, and leaving us a gross margin of 24%, which is around 16 crore for the quarter. EBITDA is 8.9 crore on negative side, and PAT is 19.5 crore negative. Yeah. So we have these financials. Other expenses, if I talk about, it's around 14 crores, is 10 crores, which is mainly on account of, because the production is higher, my freight cost is higher, and power and fuel cost is higher this quarter. So there is a significant impact of, these two components of around 3 crore in the other expenses line, and the remaining is, primarily employee benefit expenses, which were lower last year. But yes, we have rationalized all the costs this quarter or this year. So the impact is 16.96 crore on a loss before tax, if I talk about from the operation side. There is another exceptional item in the P&L, which is of 2.48 crore. So we are taking corrective measures on account of hygiene and regularizing our stock. So we identified few old marketing and promotional items which were lying in various depots, which are of no use now. So we have provided this 2.48 lakh for the obsolete inventory of promotional items. So these are the summary of financials for the quarter. I will be happy to answer if any queries still there with the investors. Thank you, Neha.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Anuj, individual investor. Please go ahead.
Hi, can you hear me?
Yeah.
Yes. Hi. Thanks for taking the call. I have a couple of questions. One is, you said on the revenues there was an impact on because of COVID situation in the north and elections in the east. So my first question was are you taking any steps to on your de-risking this impact going forward? One is on the de-risking strategy, which I wanted to ask, and second is you mentioned that your quarterly run rate on sales is around 90 to 95 crores. Just wanted to understand if you're taking any steps to further increase the sales. Your growth strategy for the next 2-3 years.
Sure. Anuj, you're very right. De-risking becomes important in such scenario. As you are aware, our 70-75% revenue comes from east and north, and we have been trying to increase our revenues from west and south. That's the only de-risking one can do apart from going to industrial customers. So we have been able to increase our sales in west and south by more than 30 to 35% year on year as compared to an average sale growth of hardly 20%. And we are getting very good traction from now onwards. As you know, we have started our plants, Nasik and Chennai, only some 2-3 years back. And since then started growing the market there. So in South, we have been able to strengthen by almost 75% in the last 2 years. We are now again planning to grow it by another 70-75% in the next 2 years. And similarly in West, in fact in West we are still getting a still better response, where we have grown our market by more than 90% in the last 2 years. And here again we are trying to double the market in the next 2 years. With this, our sales in both West and South will grow up significantly. Our share of sales coming from both West and South will increase. So perhaps now it is skewed significantly for North and East. That skewness will be there, but not so much. Because we have been our traditional markets, both North and East, so that's why the skewness is there. But yes, we are taking steps to make sure that the other two regions start giving us better revenues. So far as the market is concerned, the demand is concerned. So the demand has come back to normal almost now. And we also had one more area where we were highly focused on in our industrial segment on pipe segment, the steel pipes. So we are a very strong player in steel pipes, the corrosion resistive coatings, or what we call protective coatings. So here again, to de-risk our business, our dependence on this one segment, which was affected significantly in this quarter. And I explained to you why it was affected. So now we are expanding in some other segments. These are packaging, these are oil and gas, and these are infrastructure. So what we have done is that our dependence on steel pipe segment is coming down. Our steel pipe segment got affected within industrial segment because of the high increase in the price of steel. The steel prices have gone up by almost 50%, and most of the companies manufacturing these pipes have taken the contract at the older prices. Now they are finding it difficult to service these contracts. And secondly, the state governments, which normally procure steel pipes, they are short of funds, so there has been delays in execution of these projects. Both affected our sales in industrial. So to mitigate that risk, we are now expanding from protective coating for steel pipes to protective coatings for packaging, which is like biscuits, containers, and small containers, and installation of oil and gas all over the country. With these two methods, we hope to de-risk our business and expand our markets.
Okay, thanks. So, based on this, any guidance you can give by when can we turn profitable at the PAT level?
Q3 hopefully will be a positive impact in PBT rather.
Okay. Okay, fine. Thanks. Yeah.
Thank you. Participants, to ask a question, you may press star and 1. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The The next question is from the line of Manan Mehta from Securities. Please go ahead.
Thank you, sir, for the opportunity. So I have a couple of questions, sir. So one is on our volume growth. Have you seen any volume growth? And if yes, in which segments have we seen it, the decorative or the industrial?
So our volume growth is coming both in industrial and decorative. Decorative is coming mainly from west and south, and industrial, the growth is coming mainly from specialized niche segments like packaging and infrastructure. And the other segments in decorative, that is north and east, as well as steel pipes in industrial, is almost flat. We're not seeing much of a traction. I've explained to you, both these were having some natural reasons for lack of demand. This quarter, steel pipe may not do very well, but next quarter they are having a good order book. So October, December, the order book is very good for steel pipe. So far as north and east are concerned, now they are back to normal. So we expect that this quarter onward things will become almost normal.
Sure, sir.
So,
can you
Manan,
give a number?
Yeah, just to add on, Manan, if we talk about the growth in volume, the volume growth is in line with the value growth, which is almost 46%, because decorative is our, a major player and holds almost 75% of the total turnover, right? So it is in line with the value, but as far as industrial is concerned, it is the growth is almost 53% in that segment.
Okay. So one more question was on our plant. So after the fire incident, sir, how much are all the plants working currently, and what would be the capacity utilization at our plants currently?
So we have 3 plants. You are going to go ahead.
Yeah, please, sir. Carry on.
No, go ahead.
Okay. So, Manan, we have 3 plants, Sikandrabad, Nashik, and Chennai plant, right? So, Sikandrabad, total capacity, we are operating, if I talk about these days, in the normal scenario, we are operating at 90 to 95% capacity for Sikandrabad plant. Nashik plant is again, being operational at the full capacity or almost 85 to 90% capacity. At the same time, yes, Chennai plant, because of the traction in southern market is little lower, it is being operated at 45 to 50% of the capacity if I talk about normal scenario. So, however, the Havra plant, which is the 4th one, is not at all operational after that fire incident.
Okay. And so just one more question is on the new business that you all have spoken about, getting into a new segment of sanitaryware business. So I think we are not going to manufacture anything, but it's going to be outsourced, right? How is this? I mean, what is the situation there? Thought process about it?
It hasn't picked up as yet. We are not doing it on a regular basis. It's just an experiment being conducted just to see how the market will react to it. So first year we are just studying the market. We're not doing any business per se. Next year on we look at it. So from next April we'll start looking at this market. If this experiment succeed, we'll go for it in a significant manner. But current year we are just studying it. We're not doing anything in this.
Okay. Thank you, sir. Thank you for your time. I'll get back in the queue for any questions.
Thank you, ma'am.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Vedansh, individual investor. Please go ahead.
Hi, sir. Sir, a couple of questions. One is, are we today in the distemper market? The reason being that one of the competitors was alluding to the fact that a lot of the large players have kind of vacated that space, and in fact cement color as well. So what is it that we are doing in that, or are we not present in that and looking at that as an opportunity?
So we are in the entire segment of decorative as well as industrial. except automotive paints and some specialized paints. And so when we talk about distemper or other things, basically since quite some time we have not been investing in marketing activities, so we continue to be in the economic segments. The economic segment include distemper, economic segment includes emulsions, emulsion-based paints. So typically our paint range, if I talk of in terms of rupees per liter, is on an average around 200 rupees per liter or 150 rupees per liter. On the other hand, there are other people in the market who sell a basket of both economic paints as well as premium paints or luxury emulsions. We are there in economic and premium, but we are not so much in luxury per se. We have a good traction in both these paints, so we sell premium, economy as well as distempers, and so we are there in all these categories. No player is vacating this category. All players continue to remain in all the categories. The difference is that our share in the economic segment is higher as compared to others. So the larger and the market leaders, they have a higher market share or higher share of their sales in the premium or luxury segments. So to that degree, our average selling price is lower than our competitors, and so also the margins.
Got it. So sir, does that mean that the comment maybe I would have misread it or misheard it, but I mean there was a very clear thing say from one of the listed players, right, where they said that largest players have all of a sudden decided to vacate the distemper space. So have you noticed anything of that sort, or you're still seeing that the competition is there? I mean, bigger players are still there.
So let me just take a minute to explain to you. So distemper business and the lower economic segments, they are a very important part of any company's basket. Most of the dealers, they sell significant quantities of both these products, distemper economic segments. So I may just share with you the larger players, the large industry leaders, they have not only continued their sales in these two segments, in fact they are trying to strengthen it as well, particularly in economic segments. So if you would have seen the ad recently, last 6 months, there have been ads saying that we are producing so-and-so material with a lot of shine. That shine paint, the message being that it is cheap, but gives a lot of shine. So the very fact that it gives us cheap means it is economical range, which shows that the large players are not vacating the space of cheaper paints. They're continuing their presence in a strong manner for cheaper paints, economical paints, and distemper as well.
Got it. And then based on whatever we've seen in last month and a half, how do you do you have a sort of a volume aspiration for the year, both from the paints and the sanitary ware products, in terms of where maybe next year this time where would you want us to be? Like you said, 90-95 crores is what you want to get back to at, but then beyond that also, do you have sort of an internal aspirations in terms of where you want to be beyond that, and are you seeing that happening with especially for our products demand?
So what we are doing is, we are increasing the basket of our products. So this month itself, we will be introducing 4 to 5 new products. They are new for us, but the market already has them. There are other people who are already making them. Again, we are by next month we will be also introducing wood paints. Hope we are trying to develop wood paints or find out some source for it. So hopefully by September or beginning of October we will be in the wood paints as well. That is one category which we are not there. So with these two introductions, our basket will be almost 95% of the competitors' basket we will be having. So that is one step we have taken to make sure that we also offer the entire range which others are offering. And with this, we hope to cross. You see, it's very important for us to cross the 100 crore hurdle. So our first goal is that we should cross 100 crore per quarter hurdle. Once we cross that, then we will be both profitable and also our growth trajectory will be much better. We have done it in the month of January-March quarter. So we hope to repeat it in Q3, Q4 and subsequently. So that is our target. Once we do that, then we can get good growth after that.
Okay. That's very helpful to know, sir. So, sir, apart from new product initiatives, like, are we also, like, do we have an internal target of how many tinting machines we want to have by end of the year from today, or let's say geographical expansion where we kind of want to kind of focus first, like within tier 2, tier 3 cities also, like, have we identified certain cities where we want to be, take a larger market share, and then maybe once, like you said, once we reach that 100 crore number, we can kind of grow further, right? So have we kind of finalized on that piece where, from an internal targeting perspective?
So currently we have around 500 machines, which is very small compared to our competition. Every company will typically have around 3,000 to 4,000, maybe 5,000 and more machines. We hardly have 500 machines. Our first target is within next 1 year, we'll be crossing 1,000 machine mark. That means we're doubling our machine in next 12 months. Second thing is, as regards this focus. So what we have done is we have, I think, around 60, 70 towns or small cities where we have a identifiable presence. That means presence is significant enough. Critical mass has been achieved. So these 60, 70 towns will be focusing to make sure that we not only have the critical mass, but we have a known brand name. So we have already achieved this feat in around 7 to 10 cities where, people know us as a known brand. They prefer us. And there are a couple of cities in Himachal. There are a few in Bhutan and Siliguri. And similarly, there are few in other states as well, where people feel that this is a kind of a recognized brand and people give value to us. So by this method, this same thing which is presently being done only for 8 to 10 towns, we hope to replicate for around 60 to 70 towns in next 12 months. These two strategies, we hope we will get a very good traction for our future.
Got it. So I think the supply side, maybe you explained it very well, but in terms of marketing and, let's say, advertisement and promotion, given the budget that we have, right? How does it work in the sense that you alluded to the fact that we are doing some sort of initiative at a city level, but does that really help us stand out with respect to, let's say, Asian Paint or a Berger or anything like that, right? I mean, what sort of initiatives are we doing to kind of be top of mind for a prospective customer, either in those cities itself or like Shalimar in general across India? I mean, from a demand side, so that there is a pull from customer for our products, right, rather than just us pushing our products. So how are you thinking about the promotions and advertisement for our brand of products?
You see, I totally agree with your point of view that promotions and advertisement play a very important role in the consumer segment like paints. And you need deep pockets, you need significant expenditure to carry out those. And we have not been doing it for quite some time. So what we have been taking a strategy is that we have been working in areas which are less prone to or less susceptible to advertisement and promotions. Rather, they are more based on dealers and influencers like painters. So we have been working on Tier 2, Tier 3 cities. We have been working on smaller towns. So I was talking of Himachal Pradesh. In distant places, there are a couple of towns where the advertisements per se either do not reach or do not create that kind of influence. Experience does, or familiarity does. And so our target is that instead of focusing on only branding, advertisement and things like this, we are focusing on branding, familiarity and knowledge, experience. In fact, in many of our target cities, the response we get is that some of our paints are either same or better than even competition. So we are using those plus points to kind of increase our reach.
No, sir, I think my question was like, maybe the way I would try to understand is from a local lens. For example, in Kolkata or places where there is, let's say, Durga Puja, right? So there are a lot of local brands who do a lot of advertisement during that time, right? So where a lot of local demand gets attacked. Is that, so are we kind of, at least since we can't do a national level advertising and stuff like that, for those targeted markets, have we identified those sort of activities which creates a sort of pull from a customer point of view? I mean, are those scope there for us?
Yes, so we are doing that in a limited manner. And as I mentioned that we are doing it in those markets which are our focus markets, which are basically smaller towns and smaller cities. So places like Siliguri and places like smaller, cities in Punjab or in UP, where we have a significant presence, we are using such opportunities like festivals and these things to the extent we can to promote some kind of a local promotions, either with the help of dealers or with the help of painters.
Got it. And sir, lastly, I mean, what is the growth number do you have in mind, or is it like first you want to reach 100 crore and then you'll give that clarity, or like do you have a number in mind for next, let's say, 1 year in terms of both top line?
Current year, we were planning a growth of about 20 to 25% in revenue over previous year. And going forward, we are planning to have similar or higher level of growth year after year.
Sure. Thanks. That's helpful. I'll get back to you. Thanks.
Thank you, please.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Manan Patel from Airavat Capital. Please go ahead.
Can you hear me, sir?
Yeah, please.
Sir, I wanted to understand first the payable cycle. So on the face of it, our payables look very high, and even on the number of payable days, our payables are very high. So can you help me understand how it works, and is it because of our ability to pay later on, it impacts our RM cost as well?
So there are two aspects of it. So Mohit, do you like to answer that question?
Yeah. Hi, Manan. Manan, very relevant point. Normally, if you consider the industry cycle or the typical payment days for the industry, it is almost 90 days. Yes, there are few vendors wherein due to MSME the payment days are little lower, right? Having said that, the normal payment cycle days is almost 60 to 80 days or 90 days. Yeah. So these are the payment cycle. But if you consider this time the industry pattern as well, the payment cycle has been increased because of multiple impacts in the industry, right? Or due to the lockdown impact. So the industry has been impacted, right? So if you consider the competitors' data as well, the payment days has been increased, right? So the same is with Shalimar.
But sir, if I look at historically also, our payable days have been more than 150 days. So last year it was the worst, but 2 years before that also it was more than 150 days. So why?
Mohit, 1 second. Manan, I'll answer the question. Mohit, what is the payable days? In how many days we are taking? What is our creditors now?
So our creditors is around 90 crore in totality, if I talk about, and the normal payment days is 90 days, and for major vendors they are on LC.
No, okay. Let me now come back to it. So Manan, if you see our total creditors are the order of around 90 crores. Our sales were around 109 crores in Q4 of last year, if I ignore Q1. So our payable days will come to around 80-85 days maximum, 80-85 days only. If you see competition at the same time, their payable days are typically between 50 to 60 days. So we are 20-25 days more than our competitors. In next 6 months to 8 months, we will try to bring it down to almost 65 days, shade by higher than competition, but close to them. So as you have rightly observed, last year our payable days used to be much higher. We have been able to bring it down to 85, 90. Now further we'll bring it down to 66 to 65 days.
Understood, sir. That's very helpful. And sir, the second question is, so given our the working capital cycle itself, in terms of receivables and inventories, as you are planning to introduce more products, so do we see that the working capital cycle will worsen because you will bring down the payables while inventories might go up due to new products and SKUs? So if you can throw some light on that.
So if you see my inventory, typically all my inventory is between 70-75 days. So what is our total inventory at the end of March?
It was around 88 crores, please.
88.
March end.
March end. So if you see again 88 crores, if I take it over a sale of around 110 crores, is around 75 days. Am I right? Approximately. And so my inventory days are 75 days. My receivables also around 60 days. These are again close to the industrial average. The industry operates at an inventory of around 75 or 80 days. And the receivables also are around 45 to 50 days. So we are close to that. Our working capital cycle is slightly distorted. But as I mentioned to you, we will try to rectify it. And another 6 months or 8 months, you will see our all the three fronts, inventory and our debtors and our creditors, they will be almost within 10-15% of the competition.
Fantastic. So that's great to hear. And sir, the second part of the question would be, sir, I wanted to understand if you are planning to do any capital raise, because as you said, we are not doing advertisement aggressively or ATL activities aggressively. So would it make sense to raise some capital and have more muscle to sort of do aggressive advertisements, or would you wait for your sales to reach 400 crore mark and then you would go for that?
Let us see. Actually, till now we haven't thought about it, but your suggestion is there, and I think we will work on it. And maybe next 2-3 months we will take a decision how to go about it. The second wave of COVID which came, slightly a kind of a shocker for us. And now that we are coming out of it, things are becoming normal. I think we'll drop our plans, and maybe by next 2-3 months, we will take a view on how do we kind of raise the money, raise the funds which we may need for our operations. The moment we think about it, we'll come back to you.
Thanks a lot, sir. Very helpful, and all the best.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Bilal Qureshi, individual investor. Please go ahead.
Hello.
Yeah, please.
Good afternoon to the management team. My question was, after this 1,000 crore revenue mark, what are our plans to expand? Will we commission the Aura plant, and if yes, what kind of revenue it may generate?
I think we will definitely someday commission our Havra plant, but it's too early to say what exactly will happen because still some time away. So it will be premature for me to comment on Havra plant, when we will operate, and what will be its implication. At this juncture, it's slightly far away.
Okay. So, and in Q4, when we had spoken to you, you had said that we had 2,500 distributor plus. What is the current number?
It is almost same. Because of the COVID, we could not increase the number from Q4. Now onwards, we will work on it.
Okay. Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. Participants, to ask a question, you may press star and 1. As there are no further questions from the participants, I now hand the conference over to Mr. Ashok Gupta for closing comments.
So, dear friends, we are well aware, and we kind of not very happy with the kind of results we have given for Q1. But we can assure you that hopefully things will be better. The lockdowns will not be as frequent as they were in last quarter. Situation will turn. Commodity cycle also may stabilize, or prices may be also be stabilizing now. With this, the days to come will be much better for Shalimar Paints. With these words, thank you so much for participation.
Thank you, everyone.